Let's start with something that should make any small business owner pause for a moment. You've got 20 to 50 employees. You're showing up every day, keeping operations moving, making payroll, and taking care of your customers. And right behind payroll, one of your largest monthly expenses is health insurance. But despite that, most owners in this position keep hearing the same message. You're too small to approach this any differently. Just choose a plan and move on.
Yeah, that advice is quietly costing companies with 20 to 50 employees tens of thousands of dollars every year, sometimes even more. You're paying a fixed monthly cost with almost no clear picture of where the money is actually going. You rarely see the actual medical bills. You don't know how much is going to doctors versus middlemen or insurance company profit. And every year the cost seems to go up, whether your team stays healthy or not.
And today we're calling this out clearly. Small groups deserve better thinking and better options. If you run a company with 20 or more employees and you've been told you have no real choices, this episode is written just for you. Welcome back to the Blueprints for Better Benefits. I'm your host, Rodney Jr., joined as always by my dad, Rodney Sr. And this is the show where we help employers climb step by step out of the fog of incomplete information and into real clarity and control over their health benefits.
Most small business owners are not stuck because they lack the smarts or intelligence. They're stuck at base camp because they've only been given part of the story and told that's all there is. Triforta acts as the Sherpa guide on this climb. We help you see what's really happening with your monthly health insurance costs and show you practical ways to take back control. Today's conversation is especially important for companies with 20 to 50 employees and even up to 250. We're breaking the myth that small groups can't do anything strategic about their health benefits. We'll explain in plain terms why you're likely overpaying every month and how an alternative funding model we call Guided Edge can give you real savings and more visibility without the full risk or extra paperwork of traditional self-funding. So if you're a business owner, CFO, the person handling HR for a smaller team, and you're just tired of accepting whatever renewal number shows up, stay with us. By the end of this episode, you'll have a much clearer picture and some simple next steps.
Let's start with the most common misconception small employers hear when it comes to health insurance. What is it?
Well, the most common misconception, that myth is that if your company has fewer than 50 employees, you're simply too small to do anything different. And you've been conditioned to accept whatever fully insured plan the insurance company offers you. The story usually goes like this. You don't have enough people, you can't get information about the medical bills, and you can't change the price much. Just pick one of these three options that we show you on this spreadsheet and move on.
That's a message a lot of good, hardworking owners accept because it sounds reasonable on the surface, but they trust the guidance and assume there aren't many alternatives and move forward thinking that's just how the system works at their size.
Yeah, certainly. But here's what that really means in everyday language. You pay one fixed monthly cost. The insurance company says they will take care of the medical bills if your employees need care. And it feels safe and simple on the surface. But what you're actually getting is very little information about how much of your money goes to actual doctor visits, or how much goes to the middlemen who manage the drugs, or how much stays with the insurance company as its profit margin. And you rarely see the numbers, and you have almost no say in how the plan is actually put together.
And being told you're too small is really just another way of saying, we're not going to give you control and you're not going to get clear information.
That's exactly what they're saying.
So where do most companies in that 20 to 50 employee range start to go off track year after year? Because these are typically very hands-on owners. They're watching expenses closely. They're making smart decisions in other parts of the business. But when it comes to health insurance, it seems like they fall into the same pattern over and over again. Where does that disconnect typically happen?
Yeah, I would say, the biggest mistake is accepting the idea that their only real choice is a traditional fully insured plan. where they pay one fixed monthly cost and hope the insurance company handles everything fairly. So I'll give you another one of my simple analogies that most small business owners could understand right away. So imagine you own maybe a small landscaping company, and every month you pay one flat fee to the supply company that promises, hey, we're going to handle all your grass seed, all the fertilizer, all the tools, and all the delivery that you need to take care of your business. Sounds easy, right? One bill, no headaches. But what you don't know is that supply company owns the seed store. They own the fertilizer warehouse and the delivery trucks. So they charge you whatever they want for the supplies, and you never get to see the real prices, or you shop around for better deals because you're locked in and you're overpaying. But you're told this is just how it works for small companies like yours. And that's the reality. It's very close to how fully insured health plans work for small groups. You pay one monthly cost. The insurance company decides which doctors your team can see, which drugs are covered at what price, and how everything is handled. And you very rarely get to look at the actual medical bills, and you have very little ability to choose better or cheaper options. So here's another everyday example we like to use. Think of signing up for a big family meal plan, for example, where you hire a caterer and they chooses everything. They choose all the ingredients and they mark it up. So you pay one price for all the meals. It's convenient, but you can't pick the ingredients or shop for better prices. And you're probably overpaying, but you're told that's just how the package works for families your size. And that's exactly what many small employers experience with health insurance, paying for a bundle without any ability to make any adjustments.
And because the company is smaller, those inefficiencies don't just get absorbed, they're felt more directly, right? Every extra dollar matters more at that size. So being locked into that kind of structure can have a much bigger impact on the business overall.
Oh, it certainly does. Yeah. So when you're only 25 or 35 employees, every extra $1,000 in monthly cost takes away from wages, takes away from equipment or profit you could have used somewhere else in the business.
Or repairs too.
Yeah. So let's talk about what we're seeing, right now here. And this is May of 2026. And, we're looking ahead through the rest of this year and ahead into 2027. Many small employers with 20 to 50 people are facing monthly cost increases between 8 and 12%, or even higher. We've seen 25, 50% renewal increases are not that uncommon anymore. So for a 30-person company, a 10% increase can mean easily $40,000 to $60,000 more a year in their premiums. Money that it could have gone to employee raises or new equipment or keeping their prices more competitive for consumers. And a big part of that increase is coming from prescription drugs, specialty medicines like GLP-1 class used for diabetes and weight loss management. They're becoming much more common and expensive. In many traditional plans, the employer never sees exactly how much is being spent on these drugs or whether were even any cheaper options available. We're also seeing is that insurance companies often raise rates the same for all small groups, whether your team is healthy and uses it very little or not. And they price everyone together, which, doesn't benefit those employers that are proactively taking good care of their health. So over the next 12 to 24 months, we expect the pressure to continue. And the good news is that more small companies are starting to look at these alternative funding models that we've been promoting for quite some time, because the old way is simply becoming too expensive to keep accepting without question. So this hits, I think, especially hard for small businesses, especially those in and around Nevada. I'll take an HVAC contractor, construction crews, or manufacturing shops, or hospitality teams. We know every extra dollar in health costs makes it tougher to compete for good workers or invest in their businesses.
So small businesses are feeling this squeeze harder than a lot of people realize, right?
They certainly are. And that's exactly why having a clearer, simpler option that matters so much right now.
So, how does this affect hiring and keeping good people in today's tight labor market?
Yeah, well, the labor market's tighter than ever, and it definitely makes it harder than it needs to be. When you can't clearly see or control your health insurance costs, it's tough to design benefits that help you attract and retain your employees. Recruiting is tougher than ever. In Nevada, construction crews, HVAC companies, mining companies, hospitality businesses, they all compete really hard for skilled workers. And if your monthly costs keep rising with no visibility and you have less money left to offer better wages or lower what employees pay out of pocket when they do use their health plan, that's a problem. So, our Guided Edge plan was designed to specifically tackle these challenges. It helps by giving you more control so you can make benefits part of your talent strategy instead of just another rising expense. Many small employers who transition to our Guided Edge program tell us that once they gain visibility, they can finally use some of the savings to make their total compensation package more competitive, which helps them with retention and hiring. One HVAC company owner said the savings let them offer a small wage increase that helped them keep two key technicians who were considering leaving and going to a competitor. So here's the truth most small employers never hear. You're not too small to think strategically about your health benefits. In fact, because every dollar matters more when your team is smaller, you may actually have more to gain by making smarter choices.
This segment is brought to you by the people and platforms that make this show possible. First, Triforta. If you're an employer who's tired of runaway renewals, bloated, fully insured plans, and the feeling that your benefit strategy is working against you instead of for you, then hear us clearly. You do not have to play that game anymore. Help business owners fix broken health insurance. We bring cost containment strategies, self-funded captives, data intelligence, and real-world case studies that routinely save employers 6 and 7 figures without cutting benefits. If you want a benefits plan that actually rewards results, visit Triforta.com and download our blueprints for better benefits. And second, Aperionics. If you run an insurance agency and you're still drowning in manual quoting, data entry, or commission reconciliation, you're leaving more than time on the table. You're leaving money. Aperionics is the automation layer built by insurance people for insurance people. AI quoting for carriers that don't have APIs. Instant policy data extraction, commission statement automation, proposal generation in seconds, not hours. Aperionics reduces operating costs and gives teams their time back so they can work at the top of their license. Learn more at aperionics.com. That's APEIRONIX.com. Triforta and Aperionics, 2 companies, 1 united mission. Fix what's broken, elevate what's possible, and help real people thrive. Now let's get back to the show. And size is not the real problem. Lack of clear information and lack of good options is the real problem. So let's bring this down to the real world for a minute, because a lot of this can sound good in theory, but what people really want to know is what actually happens inside a business when they decide to make a change. So when you think about some of the small companies you worked with, 20, 30, or 40 employees, what was going on inside those organizations before they made this shift? What were they feeling? What were they struggling with? And then what actually changed once they decided to take a different approach?
Yeah. Okay. Well, yeah, definitely some examples that stick top of mind. One example that's kind of top of mind is a 28-person HVAC contractor here in Nevada. They were paying more than $500,000 a year in health insurance costs. Their team was relatively young and healthy, and they didn't have a lot of large medical bills. Yet every year, their monthly costs kept rising 10, 12, 15%. Or the owner sat down with us and he was feeling pretty frustrated. He said, I can control every other cost in my business, but this one feels completely out of my hands. And his HR person was spending hours every renewal season trying to explain increases to employees with no good answers. Every time you get a renewal increase, something has to give. And HR teams are just tired of having to explain to employees at renewal time and at open enrollment that their out-of-pocket maximums going up, their co-pays are going up, their deductibles are going up, and they just continue to feel stuck. HR didn't want to cut benefits, but they also couldn't keep absorbing those big increases. So when we showed them the numbers in plain English, and they saw that a large part of their money was going to the middlemen and the price spreading who managed the drugs and to the insurance company's built-in profit rather than to actual care for his team. And after some discussion internally, the owner and HR person made the decision to move to our Guided Edge program. In the first year, they saved over $118,000. So their employees kept the same doctors, the same cards, and they didn't have to raise their deductibles or their out-of-pocket maximum. So those employees noticed almost no difference whatsoever. And the company simply kept more money that they could use for raises, for new tools, and even growing their business. The owner later told us it was the first time in years he felt like he had some say over this expense.
Right.
So there was another example I'm thinking of. This one was very rewarding. It was a 37-person medical transport company. They were facing a $68,000 increase in their costs. The owner, and the person handling HR were both worried about how they would absorb that hit and what it would mean for their margins. They were tight and their ability to keep good drivers. And they kind of felt trapped. They didn't want to pass more costs to the employees, but they also couldn't keep cutting their profit or raising their prices. So we helped them switch to the Guided Edge. It took about 4 weeks, and they saved $95,000 in the first year. And for the first time, they started getting monthly reports that showed exactly where the medical bills were coming from. And they could finally see patterns, and we could make small adjustments instead of waiting for a big surprise at renewal time. The HR person said the monthly reports actually reduced her workload because she could actually answer employees' questions with real data. And I'll give you one more example. We also saw this work for a 45-person manufacturing shop with head shift workers, and the HR coordinator was overwhelmed every renewal season trying to explain, just like many do, trying to explain why costs keep going up. And after moving to Guided Edge, she gained, just like others do, the clear reports that were provided monthly, and the team actually benefited from the savings being used to lower what employees paid out of pocket, actually lowered their copays, lowered their deductibles. So as a result, retention improved because employees felt the company was being thoughtful with the benefits and actually finally improved their coverage for the first time. So one shift supervisor actually, I remember mentioned, made him feel far more valued and appreciated for the first time. So these stories show that starting at 20 employees is very realistic. And we've even seen companies who didn't want to make the move to a full self-funded structure up to 250 lives choose our Guided Edge program because it keeps things simple while still giving them very meaningful control and savings over their fully insured plans.
For a small business owner who is not a numbers person, walk us through what this alternative funding model actually looks like in simple terms to implement and also use at their company.
Yeah, no, happy to. Think of it like building a basic monthly budget spreadsheet for your business. So we do this. First, we look at your past medical bills and we make realistic analysis using actuarial models that actually estimate what you're likely to spend each month. And that becomes our baseline. Second, we add a reasonable range for months that are higher and lower, because some months your team might have more doctor visits than others. There's seasonality of winter seasons and flu seasons that need to be taken into account. And this gives you a realistic operating range instead of one fixed number. And then third, we put in clear protection layer on top. This protection says, no matter what happens with medical bills this year, your total cost will not go above a certain agreed upon number. And that's your fixed maximum cost. So with Guided Edge, you still have predictable monthly payments that feel similar to what you were used to, but now you also get to see actual medical bills each month and claims. And if your team stays healthy and uses less care than expected, you get to keep some of that savings. And it's designed as the middle path It gives more visibility and savings potential than the traditional fully insured plans, but without the worry of unlimited risk or a lot of the extra paperwork for your small team of a self funded model. So before, small companies were simply adding 8 to 12% to last year's costs and hoping for the best. And after switching to our guided edge programs, they're actively watching the numbers month to month, and we can make small changes. For example, one high cost medication is driving up the total. And with guided edge, you see it early in the year, often find a lower cost alternative. And that one change alone can save thousands of dollars that go straight back to your business or to your team.
So instead of just paying the bill and hoping for the best, you're actually watching the numbers and have some ability to improve them.
Yep, I've said it many times in previous episodes. You can't manage what you can't measure. I'll keep repeating it. So, that shift from guessing every year to actually understanding and managing the cost month by month, it's one of the biggest changes for small companies that can be made.
What's the most common pushback you hear from small companies considering this kind of change?
Yeah, well, the biggest concern usually comes from the person handling HR. They say something, and it typically goes like this: "This sounds interesting, but we're a small team, and any extra admin work is going to land on me. And I'm already wearing a lot of different hats. I wear payroll and compliance and employee questions. They all come to me. Then I have open enrollment, and I don't have the time to take on any more." And we understand that's a very fair and honest worry. But the good news is that the Guided Edge program is built specifically for lean teams like those. A good partner takes care of all of the heavy lifting, reviewing the medical bills, watching for unusual high cost situations, preparing simple, easy to understand, digestible monthly reports, and helping with employee questions, actually taking on those questions directly so HR doesn't have to. Many HR people we work with tell us they actually end up with less stress because there are fewer surprise problems showing up at renewal time. Instead of
Absolutely.
spending hours chasing down renewal explanations, they get clear information on a regular basis.
What about the fear that we're too small to make a difference? What about that?
Yeah, we hear that one a lot, but 20 employees is a very realistic starting point. The structure works really well because it was designed for companies exactly like those, not just for huge corporations. Other common worries include it feels too risky, or this one we hear a lot: our broker says we shouldn't change anything. So, we address the risk concern with clear protection layers that cap your maximum cost. And when the owner and HR person sit down together to look at the actual side by side numbers in plain English, the decision usually becomes very, very clear. We also hear, will my employees be confused or unhappy with any changes? And in every case, employees notice very little difference. They keep the same doctors and the same insurance card. What changes is really what happens behind the scenes. And often they benefit from lower out of pocket costs and better plan features when savings are reinvested back in the plan.
So the admin burden worry is real, but it doesn't have to be a deal breaker.
No, correct. With the right partner, small teams, they find the change is smoother and less work than they expected. So the biggest pitfall we see is waiting too long or trying to figure everything out all by yourself. Small companies do best when they work with a partner who knows how to keep things simple and clear, and one that's walked this walk many times before. So here's 3 practical next steps any employer can take this month. First, ask your current insurance advisor for a summary of your last 24 months of basic claims information. Second, have someone run a simple side-by-side comparison that shows your current monthly costs versus what guided edge style model could look like for your team. Third, sit down with the person handling HR and the owner or CFO to review the numbers together and talk about what matters most to your team and your budget.
And when you step back from everything we've talked about today, this isn't really about complicated insurance terms. It's about whether your small business continues to accept a system that keeps you in the dark or takes some simple, practical steps toward more visibility and more control over one of your biggest monthly costs.
Definitely. Guided Edge is designed to give you many of the savings advantages that larger companies get when they go with self-funding, but without the full risk or extra complexity that small teams worry about. It really sits right in the middle. We kind of coined it our Goldilocks option. It turns your health benefits from a monthly cost you hope works out into something you can actually understand and manage better.
Self-funding isn't the destination. It's the starting point. And if this episode made you think differently about your health insurance costs, do a fellow small business owner a favor and share it with them. And as always, thank you for climbing with us, and we'll see you on the next one. Take care.